Hey, welcome back to another episode of Invest in You. Finding good stocks in a market that is oversaturated with a lot of companies is oftentimes very difficult. So in this video, I'll be giving you a little stock pick or a stock to look at that I really think as a good player for in the JSE market. Okay, South African market, here we go. So we know the South African market is a lot of the times not the most favorable or doesn't have the biggest growth stocks or the biggest tech stocks or whatnot. But South Africa is an emerging market, and that's why I think personally there's a lot of good stocks. You just need to find them that you can probably get into now and they can grow a lot. So South Africa's JSE market is known for not liking penny stocks or your small cap stocks. The guys normally only invest into these big companies that already have a good reputation, or they're very big. Okay, but that means you have a bigger opportunity to get into these small cap stocks that can grow really well, because normally what happens on the US market is by the time you realize a company is IPO'd, or you find a good small cap stock and you try and invest, it's huge or it's big or it's too expensive. So in South Africa, great. Now, before I get into my stock pick, okay, what it is for you to go look at this company when I give you the company. I'm not a financial advisor, so I cannot tell you to buy, sell, or hold a specific stock. Also, read the disclaimer in the description box, but this is for information purposes. What I'm telling you is go look at this stock, see if you like it, delve a bit more deep, but I'm going to give you some good pointers of what they are, what their figures look like, and then you can make up your own mind, okay? So my JSE stock pick for this video is PPE, okay, and not the protective equipment that we all have to wear because of COVID. It is Purple Group, okay? Now, some of you might know, and some people actually do not know this. Quite a few people do not know this. If you've been watching my videos, I use EasyEquities as an investment platform, which is pretty much Robinhood, but not the same, and I'll tell you now why. But Purple Group owns EasyEquities. They own Easy Properties, which is the new thing I've been talking about in property investing. They own Emperor Asset Management, and Emperor Asset Management, they focus a lot on using data and algorithms to help people obviously invest. So it's asset managers pretty much, but they just have a bit more of a data approach. Then there is GT247.com, which is a trading platform. Now remember, EasyEquities and also all the videos I do on is pretty much investing philosophy, long term, medium term, not day to day. So if you really want to trade stocks, GT247.com is Purple Group's trading platform. And then they also have another company called Rise. Now, Rise is a retirement fund, and they manage retirement annuities and retirement funds. And yeah, so that is all the companies that are held by Purple Group, which is amazing. And I mean, you are investing, you are making the right decision for financial independence. And what better way to invest into the company that is making this possible in South Africa? Before we look into the financial stuff, just looking at the companies that I have. Now, EasyEquities, we know, is great. What they've done for democratizing like the investing market is huge. Now, if you follow the US markets a lot, there's Robinhood. Now, Robinhood is on a lot of fire because of the way they make their money. Okay, Robinhood makes money by doing trade flows. What that means is Robinhood makes money by having people invest in like mass scale into certain stocks and then they obviously get compensation for doing that. Now, the EasyEquities model is they are commission based. So that means every time you invest, they get a small percentage, way less than an asset manager. And that is so then obviously Easy Properties, I'm not going to waste a lot of time on that. I've made various videos on Easy Properties. Go watch that, like somewhere over here, things are gonna like fly in, watch that. Okay, then there is the GT247.com, which is obviously the trading platform. Emperor Asset Management, what they actually do on EasyEquities platform, they have a few baskets and bundles that they help you, and they also so Emperor Asset Management, what Purple Group is trying to do with that company is they try and move your institutional investors or asset managers that manage a lot of clients to move them onto the EasyEquity platform. So it's kind of like a gateway to like EasyEquities, which is great. Then there is Rise. Now, when we get to the financials, I'll tell you why I'm not a big fan of Rise. It is a retirement annuity fund, so it's probably good in the sense that it is helping people understand retirement annuities on EasyEquities. But yeah, just on Rise. Rise brought in a 0.7 million rand loss in the previous financial year, well, 6 months trading, and that is like very concerning for me because it is maybe a good company, but not a great company to have for Purple. So I think they definitely need to either zero out that line or do something there. So that is my only concern. Nothing is ever 100% perfect. If I had to say, my two big concerns is obviously Rise and Emperor Asset Management, and maybe a little bit the G247.com thing, because not a lot of South Africans do the whole trading thing that well, and obviously also you have to pay, so it's a lot more expensive than EasyEquities. But yeah, it's not doing too bad. But then I am extremely bullish on EasyEquities and Easy Properties. Up until recent, it used to be a penny stock, meaning below like 1 rand, and now it's sitting at around about 1 rand 30, 1 rand 28, like around about there, and it is a great small cap stock with a lot of future potential growth. Okay, a lot. If we just look at a few of their key metrics. Now remember, I made a video on the metrics I look at when I look into a company, but let's quickly go through them without wasting too much time. So the PE ratio is at 59.02. The industry is at 12.12. So if you look at that, you'd probably say, okay, it's overvalued, but remember, you need to like gauge what you're at. But I look at the PEG ratio more than I look at the PE, because I want to include growth. I want to include future growth that is estimated over the next 5 years, because that gives you a better estimation of whether this company is valued, overvalued, or undervalued. So for their PEG, you take that PE, okay, and you divide it by their forecasted annual future growth, which at the moment is at 22.3%. And then if you divide those two, you're going to get 2.6. Now, yes, that still indicates an overvalued factor, but from what we've seen and the financials I'm going to show you, that makes it a lot more attractive, because remember that future annual growth that's projected is done by analysts, so it's not obviously for sure, and I think they're probably lowballing it a bit there. Looking at the other ratios, return on investment is at 9.25%. Your debt to equity ratio is at 0.24 to 1, which is ideal for this type of company. They have a very good gross margin, okay? They have a 98% gross margin. Their profit margin, not too much better, well, isn't too great. It's 9.8%, but that's good enough because they are obviously investing a lot into their growth, because they are growing exponentially. But let's take a bit more of a deep dive into the financials, okay? So if we break down obviously the Purple Group area and we look at their subsidiary companies, so the Purple Group, what we're going to do is we're going to look from the 2017 to 28 financial statements, and then we're going to look from the 2020 to the 2021 financial statements. Okay, so the first batch is they were obviously down 9% into that first, and the reason why I'm doing this is obviously just to show you how their growth is compared to in the past to now, because they were only founded in 2015, well, EasyEquities part, Easy Properties recently, so there's not really any financials on that quite yet. And then now recently they have a 79.5% revenue growth in the past financial year. EasyEquities in 2017 and 2018, so I'm just going to call that the first part. The first part, they made 123% growth, okay? Then in the past year they made 197.6% growth. That is huge. That's their revenue growth. It is huge. Now you can see Emperor did not do too great, but it's getting its act together. If we look at the amount of funded accounts, for instance, in EasyEquities, in 2017 there was only 29,000, 2018 58,000, and then in 2021 520,000. That is really exponential growth. And now recently the CEO also tweeted that they've reached 1 million subscribers onto the platform, which is obviously big. Now that is not active customers, because these figures are active, so it'll be interesting to see how many of those million like subscribers are actually funded and active. Then there is the GT247, which has a bit slower growth. Now we're going to get to the big Kawanas. Okay, the profit after tax. Here you can clearly see how the company was literally burning through cash, but that's how most startups and how most small companies, and now they are growing very, very fast pretty much. And as you can see, the GT247, which is one of my worries, is like not really growing that much, bringing in a loss. Not really a big fan of that, but it is at least not doing very, very bad. So let's look at the net asset value per share that you get. So these are in cents, and that's pretty much been relatively constant throughout. Just shows that they are like, obviously what you invest, it's relatively constant, so not that volatile of a company. The earnings per share is, and this is when any earnings call comes out, earnings per share are great. So you look at this and you can really see the earnings per share growing really from a -5 to a 0.85 today. That is what I'd like to see when I invest into a company. And then the cash and cash equivalents, as I said, that is one of the most important things I like to look at. A lot of people don't always like it, but I just feel if a company has cash on hand and cash equivalents on hand, they have the ability to pay debt, pay bills, invest more into the company, maybe in future pay a dividend or something, but it just puts the company at a good position to handle storms, especially like when the COVID situation happened. Obviously that made it better for them, but storms like that, then a company needs cash on hand to actually go through those times. So you can see their cash on hand is very attractive, relatively stable, which I like. But that is pretty much PPE, Purple Group, why I like it and why I think it's a good idea to go look more into this company. There's a lot to it, but as I said, is go look at the company. The CEO is very, very active on Twitter. So make yourself a Twitter account, go look at what he says, go look at what they do. And I really feel, especially the Easy Properties and the EasyEquities is huge. When I think of Purple Group, those are the two companies I look at. I have to look at the other three companies because that affects it. But to be honest, I'm one of those people that really feel like these two companies are going to do so good that those other companies can do really, really bad and it probably won't show, which is not a good way of thinking about it, but it is a good argument, I guess. I hope that helps, and hit like, subscribe, do the thing, and yeah, stick around, subscribe for more stuff like this. If you guys have any companies or stocks you want me to look at, put it down in the comments box and I'll try and evaluate what they do, how they are, and what I think about them. Cool.